Okay, I've been talking for the last 30 minutes and I lost the entire footage. And now we have to start from day one again. What a bad start to the video. And I was trying to keep it below an hour, but clearly I don't think that's gonna be possible. Let's just start again. Um, I don't even remember what I was talking about. Okay, so we started off Friday with a big downfall for gold. And now I don't know if it's going to reverse. I don't know if it's going to push up. I was expecting a reversal. But again, I stay away from trades that I shouldn't be entering. I stay away from the bottom zones and the top zones. That's something I said in the last video. I stay away from those zones because you just never know how the direction is going to go. Regardless, I took a trade over there. I took a trade over here on the 1 minute time frame. Again, biggest mistake that I ever made. But this was because of fear. This was purely because of the fear that I was like, okay, it's not breaking above the higher highs, or like it failed to break above there. Because I was really trying to fit the narrative over here. I was like, nah, I can't miss the movement. But on the 15-minute time frame, it was a bearish direction or structure. I was like, shit, you know what? Whatever happens, happens. And then I lost 7 over there, but the straight gets invalidated very easily. Like now that I look at it, only because of what we've learned over this week, especially because damn, this was a really bad start for a week. We technically lost all the profits that we made in the previous week, but it's okay. We ended the last day strong. Everything that we lost is tuition for all the new things that we've learned over the week. Now, again, I invalidated this trade because right now, the whole reason I would not enter this trade is because I was trying to force a narrative. And that's why I rushed. But the structure is just not there for it to support the the sell. Like just I was trying to hope. I was aiming for a liquidity grab, and also because keep in mind, normally when there's a big push, it normally follows back. Like you see that big can like there's always going to be a reversal at some point or another. And I don't think that was the reason I entered. It's just I was hoping for a later liquidity grab. Um, Even though like direction wasn't supporting it on the 1 minute time frame, it was because of the 15-minute confidence. I was like, shit, I just don't want to be late. And that's how we ended up with the loss for the day. I didn't trade after. I was like, I'm not trying to lose all the capital that we've made over the week. Again, now I'm waiting to see how structure plays out. And I was like, if this is a reversal, it's just going to go that way. And to my surprise, it did. And now we are trying to replicate how the movement goes. So at that point over there in the back, price breaks below in the same direction. I was like, okay, it's just going to mirror it and it's going to be a reversal. Now, here is the issue. So, again, this trade, I didn't enter. I did not enter and I was so pissed about this. Keep in mind, I could have made I could have made double of what I need for the day on the trade, but I missed it. Why? Because I didn't know these things back then. So first of all, this is a supply zone, right? Supply zone essentially, to me, like my definition or of how I've been seeing these things are small pockets, especially in situations like these where just there's no like structural identity on how price is gonna follow through. Like okay, now you see like based on confirmation bias that yeah, that is a reversal of this in a way, but just when there's situations like it's just constantly going down and you don't know when it's gonna push back up, you rely on these kind of zones where price is just consolidating. Now, what consolidation means is it hasn't decided whether it wants to go up or go down, so it's just a constant struggle. And the only way I can validate this trade now because of how I've learned things over this week is that first of all we have a strong direction bias, right? It hasn't broken above, and it's failed to break above these higher highs, and you see it keeps breaking structure. It keeps going down and down and down. And that entry would have been perfect because now it's not only did it fill the resistance here, support here, it's pushing back down. So now, essentially, I would have taken TP out at this range and then move stop loss to that point so that I can take some profits out, leave some room for a potential liquidity grab because I'm expecting this to push back down if this is a reversal. Um, and then I was like, okay, I missed that trade. And now I'm like, okay, you know what? I need to win. I have to win. And again, there's no structural identity over here. So I'm confused as to what the trades are doing because gold just keeps falling down and down. So I was watching Mambo FX and I was like, oh, he's turning $5 into 1,000, $20 into 3,000. Like he's getting all of these trades and shit. And he's getting them right. I'm like, okay, you know what? Let me try what he's doing. So I don't remember exactly what it's called, but it's like he has this direction. Keep in mind, this is wrong. It's supposed to have like an actual directional push upwards, like boom, 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 like that, you know. But again, I was just trying to force it, and I got wicked out early. It broke below, and I got wicked out, and I was like, you know what? I have to enter another trade because I know it's gonna go up. And then I waited and I entered again, and then I got wicked out again, and then here too, I didn't enter this trade. Oh no, I did enter this trade, but my entry was not at this point. It was around this region, and I got wicked out at that point. But trade would have played out. Stop loss was too tight because I wasn't trying to lose a lot of money. But structurally, like again, this is wrong. It luckily worked out, but just this is not the way because it's just straight downwards. Um, and then we are done with June 9th. We walk away. We don't trade. This is a trade. Oh no, I did enter this trade and then I got wicked out at stop loss. But look at how the trade played out. Again, this was my mistake. I put my stop losses based on the 1 minute time frame, and it wasn't because of larger time frames that got me wicked out. Because look at how far this structure plays out. I mean, look, it goes even beyond my no trading zone, and then it's just there. It hits TP. It literally hits TP. Okay, now 9th June. Now, just to make up for the losses, the consistent losses that we had on that day, I think it was just, no, I think it was like one or two losses. Right. Anyways, we're still in the red. I entered a trade over here. I entered the trade. It was like a quick, small grab. I got like what $5 on that trade, and I was like, okay, you know what? Now we have a $5 buffer that we can work with. Now, here comes the annoying part. We took 4 more trades after that 5. Again, mistake was we tried to keep, we tried to sustain as much money as we can. We didn't want to lose a lot. So my stop loss was at like $5, $6, and it was stuck to the 1 minute time frame. Okay, so that was the first. What day is this? Okay, so we're at 9th. Okay, 9th June. Got with that there. Got with that there. And then I got with that where 8th June, 9th June. Right. So I entered a trade here for a potential buy because I am now finally expecting a reversal. But guess what? Gold failed and it drops below. I take a loss, and then I enter again. And like, okay, you know what? Now it's gonna push up because price was slowly starting to break up, and I was like, yeah. And then it pushed down, and then we lost more. And then that was 2, 3 trades. Okay, we are red for the day. we are officially red for the day, right? And then I decide to enter again, which is my fault. I tried to chase. Okay, I'm trying to look and chase individual candles. So at that point, I'm like, okay, you know what? Maybe this is the John Wick structure. But I forgot. Okay, let's say if this is the John Wick structure, I forgot to look at this one. That would have ensured that yes, it is pushing down. Because look, even if the buys are weakening over here, the sell is imminent. So I would expect it to reach the higher highs, at least on the 1 minute time frame. It would go all the way to the bottom. But I got with that again at that point. I was trying to chase a buy, and then I entered again out of frustration because price started to go up. I was like, nah, I have to enter this buy. We ended up with 4 losses for that day and 1 win. And that 4 losses just completely eradicated my profits for the day. We were at June 9th. Yeah, okay. Okay, no. So we were on 4 losses for the day. 4 losses for the day. We didn't win any. And then we head into June 10th. Right. Okay. So this is something we have recently learned um, in these last few days, based on how the war is going, based on how gold's been moving. So what you see here is a supply zone. Essentially, I already spoke about this. I don't know if it's there in this part of the video. I don't know if it's there in the previous video that got cut out. But supply zones again, consolidation when it's not deciding whether it wants to go up or go down. It's not really breaking. There's no like price action that's supporting it. So it's like a zone. It becomes a zone that's going to get filled eventually later. And it's something you can decide if it's going to break above or break below. Essentially, it's close to what we used to do before, but before we were stuck on the structural aspect of it rather than the support and resistance aspects of it. So trade one, uh, I don't think we entered this one. I think yeah, this was just an observation trade. This is June 10th. Right, June 10th, we did enter a trade. What trade was that? June 10th. Okay, so June 10th, we tried to chase the movement. We got a quick little profit right there. It was for around $5. $5, yeah, it was around $5. Then we entered another one. We were trying to chase the movement again. We got wicked out early. No, we didn't get wicked out. I only put a loss. I tried to put a small loss around $3, and then we got wicked out right there. Price broke above. And then price did break below. So it's like, yes, it was going below. It's just my stop loss placement was dog shit. Then we have another trade um, where I am expecting a price. So again, I don't know why I took this trade. I actually don't. I really don't remember why I took it. I think it was like a frustration thing. I should have recorded why I did it because there's no reason for me to take a stupid sell here. Like it just doesn't make sense. I think it was like just based on direction, and because it was failing to break above, I think that's why I entered. But price just reversed and wicked me out. Again, here's the lesson for the week: stop placing stop losses on the 1 minute time frame if you're not trying to scalp. Base your stop losses after you confirm 5 minute, 15 minute, 30 minute. Look through all the time frames, but the ones you stick to mostly. But now I'm going to take most of my trades based on the 5 minute time frame. On the main account, the 5 minute time frame is just going to be the main one that I use. 15 confirms the direction, and then I look for fair value gaps in the 1 hour and the 4 hour time frame. Um, and then what happened after? Yeah, okay. So we took a trade there, we lost there, and then we took a what did we take there? We took a sell, right? And then we got out. It was like a direction out thing. I walked away with like $1 or $2 in profit in that. Yeah, like $1.92. That's what I walked away with on that trade because like direction's already there. It's gonna push below, and it would have if I put stop loss above. I think it would have hit TP, but I don't think. I think it was like a 1-to-1 win, and I didn't want to take a small win of like $7 or $8. So again, we walked away after that. We took one more trade. Um, Actually, took two more trades. We took a sell from here. Again, directional bias. I'm just looking for direction at this point. Forget liquidity sweeps. Forget everything. We get with that again over here because I entered the sell and it was pushing below, and then I got greedy, and then we just got with that over there because my stop loss was placed around that zone. It was not placed above any potential liquidity grabs. Um, so yes, we got with that over there, and then I was like, you know what? What the is going on? Sell is still active, and then I had a sell again, and then stop. But I entered so late. It was somewhere there, and my stop loss was reaching really high, like way beyond my comfort zone. I was like, yeah, I'm just gonna walk out of this, and then we just lost more money. So 10th, we had a collective profit of 6, and then we lost. Oh, that's bad. We lost 16, 20, 25. Oh yeah, this was the bad day. $25 on the trades, by the way. $25. Okay, so now we come on to us actually sitting down in a space where we can actually look through what we're doing. So here we are. We are June 10th. We're still June 10th. What the hell, bro? The video has not. Okay, this is June 11th, technically. Take this as June 11th. June 12th is the day after, I think. Yeah, okay, so take this as June 11th. Because it says 10th there, but I think it's because of the time frame. Yeah, no, I'm not doing that. Anyways, June 11th, we are now looking at fair value gaps. I found an Instagram reel on how you're going to mark at structures. So essentially what we did here is we went to the daily time frame. I'm not going to open it because it's just going to look messy. But we had the daily highs. So the previous day's highs marked. So essentially, let's say if that was the highest point, we marked that out. And if this was the lowest point, previous day low, we marked it out. Then we went to the 4 hour. We went to the 4 hour time frame. Holy bro, like whatever. Let's go to the time frame. Let's go to the. We're trying to look at things here. All right, so based on that logic, it should be June 10th here, right? So somewhere there, June 10th, right? So June 10th, we are at this point here. Okay. You see, it's just okay. So it is June 11th. What the fuck is going on? Okay, this is very confusing. Like I think I'm turning like just really stupid. So now we have a fair value gap, and it's a gap between two candles that haven't been filled essentially. So we have the 4 hour fair value gap, and I was waiting. So essentially, it needs to be filled. It needs to be unfilled, untapped. So at that point, we were somewhere here, and the fair value gap was placed accordingly. I was waiting for it to tap back into it. We had a 4 hour fair value gap, and then we had one on the 15-minute, and then we had one on the 1 hour as well. And then here is when we actually stick to the 15-minute. Any decisions we make are based on how 15-minute and 5-minute starts to play out. So 15-minute just gives us directional entries, right? 15-minute is for directional entries. We're at the standstill over here. We're on 15-minute right now. Let's see what the first trade that we took was. June 11th, right? June 11th, our first trade of the day. 15 minutes, June 11th. Okay. So, June 11th, we have our first trade, someone around this region. So, this is another Instagram guy I found. He was really giving me good breakdowns of structures. So, I just wanted to see if it's going to play out the way he wanted. That's how he marked it out. And I was like, okay, you know what? Maybe it could be that. I don't know. I'm just gonna mark it out to see if that's the way it goes. And then I moved back to the 5 minute time frame to okay. So we're here on June 11th. Um, that was the first entry that we took. Um, and that was because just I think it was because I got a signal from one of the Telegram groups, and also because there's a strong rejection candle, and I saw like a quick push down, and I was like, yeah, you know what? Let me just get it on this early exit. But technically, it could have played out because of reversing, because it just kept reversing. On the longer time frame, it looks like a consolidating zone. But technically, this supply zone over here, it got tapped into from the top. Liquidity got swept, but that was the buy side liquidity. That was the sell side liquidity. Buy side liquidity got swept, and it started pushing down, and it could have pushed way further below, as you can see over here. Um, that was trade number one. We walked away with 532 on that, and then again it was like quick liquidity snags that we did here and there, um, and it was like candle movement only. So I entered that one over there. Um, No, I entered this one here. So I entered this because I see like a candle rejecting. I was like, okay, you know what? Movement is gonna be there one way or another. I walk away with another $2 over there and like another dollar over there. That's $6 over there. Uh, and then I lose a dollar because I tried to chase another candle. I expected this to go down as well, but clearly it didn't. I had an early exit of a dollar. Um, and then again, I get another $2, $3 chasing the next candle. So this candle I entered, um, it broke below. I had stop loss set there. I exited early, um, and then I entered the big trade where I lost. Yeah, where I lost. So we collecting like all those small scalps. We managed to make it up to 9, and I was like, "Yo, we're really close to 25 for the day. Maybe just let's try to get like one big trade." And I was like, it's downward, and here there's no logic. So for the trade here there was no logic, and I entered without any logic. Because what does it mean? Normally when you see like, I don't think I can draw that here, but essentially what that means is normally when you see a structure going this way, that's what happens. It's something I've read, so I was like, and it's something I've seen occur a lot. So I was like, maybe, like that's the explanation for it. If you see this, you can assume that price will most likely go that way. Um, but again, that's just a part of the confluence. It doesn't actually guarantee a strategy, but it's one of those candle patterns that you can look at. So you can see it push down twice and it goes up. But right now, I was just chasing this downward trend. I was like maybe trying to come back, sweep some liquidity, and push back down. But then we got wicked out because news came. So price action pushed way above what we could have done, and we lost. We were in complete negatives for the day, and then we saw this big push up, and I was willing to enter, but I already lost so much for the day, and I was like, yeah, we're not in a position to lose more because we are trying to get a profitable day, and I walked away with those two, even though this trade would have made me my daily target. But we walked away, and that's okay because you just never know how these things play out. It's a news entry. Then we come to final day, which is today. So the previous highs. So the previous day high is was there. Was it there? I think it was there. Yes, the previous day high was there, and the previous day low was here. Now everything I've learned, I'm trying to just refine it, make it more clear, and not make stupid mistakes here. Um, there's another really good trade that I just kept for observation purposes. I didn't enter, but I'll go back into that after this. So we have the previous day high marked out and we have the previous day low marked out. So price breaks above and is rejecting. Now we're looking at a downward trend. Then we opened the 4 hour fair value gap. We marked that the four hour fair value gap is way too big for it to I think price did tap, so I was into the market around that range. Um, I saw, I was like, no, no, I was around this range, right? So that is my supply zone. Price is consolidating over there, price is consolidating over here, but I based it just on this. So at that point, I was waiting for it to push above this line because it passes through all of these over here. I waited for a push up over there, and again, my entry was way too early. But it's okay. We're gonna make sure we look at a better entry the next time. So my entry was way too early because we didn't have a confirmation of whether it's gonna go up or go down, and stop loss was way high because I was trying to. So for the last 3 days, my stop loss has been around $5 to $7, and this time it was around 17 at this entry. So I was like I kept tweaking. I was like, you know what? I've accepted whether I win this or whether I lose this. It doesn't matter. I see a structure here, and hopefully it plays out in my favor, and it did. So all those points got swept over there, and slowly kept getting worse. I was looking at a negative of around like 13, 14, and it was very close. I had my stop loss here first, and then I moved it up as soon as I noticed this point. I was like, that because we see 2 points over here. I was like, maybe it could be a potential liquidity grab, and that's why I had it marked out. So stop loss was still set there, and price started to break below. And I was like, okay, you know what? We're getting profitable. And then price rejects, goes all the way up, and then it starts. So it's on the 5 minute, but I was looking at 1 minute only. But yeah, price pushes back up, and I was like, oh, yo, I'm about to lose. And then we just came back to break even pretty close. And I was like, you know what? I need to see it constantly break down. So the price broke and broke and broke. And then it was after this one that I moved stop loss to break even. I was like, regardless of what happens, it is what it is. We're okay with that. We're going to live with that decision, and that's completely fine. Um, and then stop loss got triggered. No, the TP got triggered, but it didn't close my trade. And I was like, yo, you know what? We're actually getting screwed here. This is not okay. Because you see, TP got triggered there, but it didn't actually break at that point. So what I did is I waited for price, and it started to break above. The second it got close to my goal, so it was around that point. No, it was this one, yeah. So around that zone, price pushed back down. Um, yeah, it pushed back down, but I exited early, and I was like, I cannot risk a bigger loss. So as soon as price came at that point, I exited, and then I watched the reverse and then pushed down below. So this was the noise on the 5 minute, but on the 15 minute, it was just a straight candle down that broke below, and I hit TP, and went beyond TP. So my TP was there. It went beyond TP. I didn't have to. So I was behind $2 for the trading day to count. And then we just waited. I couldn't, like, none of these structures allowed me to enter at a very minimal risk of one to make like $2 because I only needed two. So I entered a quick scalp session. I entered two trades. It was candle chasing. I entered this candle twice actually. So price pushed back down, and then I entered because the push wasn't done yet. I was waiting for it to fill that liquidity. So I entered twice, and then I made $2 over there, and then we're done for the trading day on this account. Um, Another good trade that we did take though, while I was getting this liquidity snag, was I entered a buy over here on my other funded account, and then we looked and we exited somewhere around that range because we had a supply zone to be filled on the other time frame. So I was like, yeah, it's gonna go up based on the signal I got, and just to confirm with what I've learned, um, it just enforced it, and here we're back up above the break-even point. We are now closing for the week. We don't really have um, any other trades that we took. There were some trades that I could have taken in this zone, but I chose and I opted not to because normally it fakes me out or breaks me out or something happens market and you see market closed. I wouldn't have been able to close that position either. So what I'm looking for the next week is essentially we are going to keep looking for supply zones because right now there's no structural integrity. We're going to rely on support resistant supply zones and fair value gaps. Normally I used to think all of this was some dumb shit that didn't actually matter, but it really does. We are looking for a sell, but not yet. Um, you see, like that supply zone right there. So we have consolidation there, we have consolidation there, price tapped back and it's held. Price tapped back and it broke down. Price tapped back and it's still breaking down. But what we're missing out on here is a potential grab of this liquidity. Normally when you have these consolidating zones, price follows through with a strong breakout on either sides. And that strong breakout has normally just been filled every single time. So we are looking. I'm still observing, and I think how the next week's market is going to start is it's going to get to that liquidity zone as soon as market enters, because you see it's a bullish momentum. Um, and then we have a supply zone here that hasn't been filled yet. It's been tapped and reversed, but it's not a satisfactory one. It could count, but it's not satisfactory to me. So it's something I'm just going to watch as a potential sell too. And then we have another supply zone, but I don't remember which time frame this was on. I think maybe potentially 15 minutes, or I think it was a fair value gap. I don't remember which one. Yeah, it's a fair value gap. We have a fair value gap that's gonna maybe. So we have two fair value gaps. We have one there, one there. It pushes down, and also a fair value gap plus the supply zone. So it's both. We have supply zone, fair value gap. It's gonna push down here, maybe push down here and then push back up, or push back up and then push down. I don't know how that's going to go. Regardless, we're not going to enter on this one. This is just for confirmation. We have this fair value gap that we're going to track. Price will reach there because gold is still not looking to go. It did go up 0.17% today. Like by today we were up 0.17%. But we still have this liquidity to fill. We have certain supply zones that still need to be addressed. Let me just mark out all this. So right now we have these two for next week. We have that liquidity grab for next week. We're just gonna leave the previous day's high for now. We're not gonna look into that, but just to make sure, let's just set it up for next week so that we can just walk in and just enter this trade with everything set up for us. Only problem with this, it takes absolutely forever. Okay, there we go. Right, so my previous day high, previous day low. I'm guessing it's that. Is it that? No, it's somewhere there. Okay, previous day low is somewhere around that range, and previous day high is this one. Is it? Yeah, previous day high is this point right there. We're gonna leave the potential liquidity grab. Right. We're gonna remove this. We're gonna make it a potential reversal only. We're gonna stick to that. But yeah, now we go into the 4-hour time frame to see what we're looking at here. Do we have a fair value gap? Yes, we do. 4-hour fair value gap that has been tapped into and still deciding whether it wants to push above or push below. So here's another thing that we have noticed. Now, every single time when there's a candle formation, if the red or the green, let's say we're looking at the green, if there's a red or a green, regardless, right now it looks red, but anything, I'm not sure if this is how it works, but this is what I've observed. If it breaks above the green, then it's probably going to be a positive one. At least it's not going to break below, and you can expect the next one to be positive as well. But over here, it started below. It started below, and then you see it grab that, and then it pushed back down, but it started below, and you saw the next candle is below that as well. So those things are things you have to look into as well. We have a fair value gap that's going to get tapped into. Essentially moving on to this next day here, and then what do we have? What's left? Yo, I'm mad sleepy, bro. Just need to finish this video, have it edited, and just go back to sleep. So On the 15-minute, yes, that fair value gap has a supply zone. That is our biggest factor here that we're looking at. Let's see if we have any supply zones here. There is a consolidating zone, but that I'm just gonna mark it out just for my peace of mind and leave it there in case price decides to push until there. I'm gonna mark this entire zone out because there's two consolidating zones. So let's just mark this entire zone out. Um, Leave it for the next day. Ooh, yeah, somewhere there. Okay. Supply zone potential buy zone because it probably might reverse. Um, yeah, so that's one supply zone. We're on the 15-minute. We have nothing yet. And again, normally before we do anything for sure, we need to see structure play out. There's no entries until we're halfway into the day, so I'm gonna enter at the end of London and the beginning of New York between that transition. Maybe even though London works the best for me, but I don't know. Not off. Um, we are now on the 5 minute time frame. Let's see if we have anything that needs to be addressed. Where's the no trading zone? What is this? Okay, right, right. Okay, here we go. We're going to get deeper spots here. Yep, that supply zone is right there. We're gonna push that out too. Let's see how that plays out. Then we have another supply zone right there, which I think it is going to address by that time, but it can be useful on the reversal, so it's going to extend that one too. Nope, just extend. We're not breaking above or breaking below. Again, none of this is financial advice. You are more than free to do your own research. This is just what I've been doing. This is just a journal of what I've been doing on these trades and how I've been taking my trades. I think I'm gonna look to see if I can enter a Bitcoin trade tomorrow, but I think this is it.